Ladies and gentlemen, good day and welcome to the Rico Auto Industries Limited Q3 FY26 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ambesh Tiwari. Thank you, and over to you, Mr. Ambesh.
Thank you. Good evening, everyone, and thank you for joining us for Rico Auto Industries Q3 FY26 earnings conference call. From the management side, we have with us Mr. Arvind Kapoor, Chairman, CEO, and Managing Director, Mr. R.K. Miglani, Executive Director, Mr. Kaushlandra Verma, Executive Director, Mr. Naveen Sora, Chief Financial Officer, and Ms. Ruchika Gupta, Company Secretary. I now request Mr. Kaushlandra Verma to take us through the key opening remarks, after which we can open the floor for question and answer session. Thank you, and over to you, sir.
Thank you. Very good afternoon, everyone. A warm welcome to all of you, and thank you very much for joining the Rico Auto Industries Limited earnings conference call for the third quarter of financial year 25-26. I, Kaushlandra Verma, speaking to you from our corporate office. I am joined today by our Chairman and Managing Director, Mr. Arvind Kapoor, and Mr. R.K. Miglani, Executive Director, Mr. Naveen Sora, Chief Financial Officer, and other members of our senior leadership team. Let me begin with you a brief overview of the policy and macroeconomic environment which continues to be supportive of the automotive sector. The Union Budget for FY26-27 introduced duty exemptions on lithium-ion cells and capital goods, along with the incentives for semiconductors and electronics manufacturing. These measures are expected to lower EV production costs and further strengthen the automotive ecosystems. Despite global uncertainties, India's macroeconomic outlook remains resilient, with GDP growth projected at 6.4% for financial year 27, the highest among G20 nations. Monetary policy remains accommodative, with the RBI maintaining the repo rate at 5.25% following the cut in December 2025. Calendar year 2025 was a landmark year for the Indian automotive industry, supported by the tax relief, interest rate cuts, and the rollout of GST 2.0. Passenger vehicles, commercial vehicles, and three-wheelers recorded all-time high sales, with two-wheeler achieved their second highest annual sales. The outlook for the auto component sector has improved further following the India-US trade agreement, which provides professional and zero-duty access for select auto components, enhancing export competitiveness. Strong double-digit growth towards the end of 2025, healthy order pipelines, robust festive demand, and the transmission of interest rate cuts are expected to support a positive close to FY 2026. Looking ahead to financial year 27, the industry is expecting to grow at mid to high single digit, with passenger vehicles growing 5 to 7%, two-wheeler around 6 to 8%, and commercial vehicles 4 to 6%. And three-wheelers are expected to grow between 9 to 10%. EV penetration in two-wheelers is projected to increase to 7 to 8%. Against this backdrop, Rico Auto Industries delivered a strong operating and financial performance. During the Q3 FY26, consolidated revenue grew by 14.1% to 632 crores. EBITDA increased by 33.2%, with margin improving to 10%. On a standalone basis, our revenue grew 25.5% year on year. For the 9-month period, consolidated revenue stood at 1806 crores, reflecting a growth of 7.7%. Our EBITDA grew by 23.2% and net profit more than tripled, driven by strong industry demand and execution, with the momentum expected to continue into financial 2027. Our revenue performance was driven by stable volumes from key OEM customers, successful launch of new programs, improved capacity utilization during the quarter. EBITDA margin expansion reflected the benefits of internal cost initiatives, productivity improvements, and better capacity utilization, partially offset by pricing pressure from our customers. Looking ahead, while near-term demand visibility remains cautious, we are optimistic about the medium to long-term prospects of the Indian automotive sector. Rico Auto is well positioned to benefit from continued localization by OEMs, increasing content per vehicle, and gradual recovery in export markets. We remain committed to sustainable growth, margin improvement, and long-term value creation for all our stakeholders. Thank you once again for your time and continued support. We will now be happy to take your questions. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Aman from Astute Investment Management. Please go ahead.
Yeah. Good evening, sir. First question is on the auto business. Could you talk about what kind of growth are we seeing for next year?
Sorry to interrupt you, sir, but your voice is breaking. Can you repeat?
Yeah. Is this better? Hello? Hello? Is this better now?
Yes, sir. You can go ahead.
Yeah. Yeah. So my first question is on the auto business. Could you talk about what kind of growth are we seeing for next year? And when do we see our margins revert to, say, 11-12%, which we historically used to do?
Fortunately for us, for the tax relief that were given last year, the GST, and also the income tax reduction that had taken place last year, that is reflecting in the growth of the auto industry, and hence the auto component industry is also benefiting by that. And besides that, if you look at the agreements we've had with Europe and with US, that will also help us to, because if you look at the export market, the total Indian auto component industry is not even 1% or 1.5% of the total global market. We need to grow and we need to participate more in the global market. And what is happening is that China Plus One is actually taking place. There are companies who are approaching us for developing a component which they used to earlier buy from China, and all that is happening. And we see a very good future for the company. And the advantage we see is that in some places like the foundry and also the aluminum die casting, where we had surplus capacities, those capacities will start getting used, and that will reflect directly into the bottom line. And you see those. And besides that, the other thing that we've added is the railways. And in the railways, it is mainly the iron side that is going to be utilized. And with the minimal investment, there is hardly any investment that is actually taking place, except in the jigs and fixtures and also the patterns. Otherwise, the equipment is all in place. Equipment already existed with us, so there will be better utilization of our foundry. And that, I think this year, the next call that we have with you all, we would be able to talk to you in more details as to what the future looks like, because we'll have our budget also ready for the next year. But we see a good growth taking place in the coming years.
As there's no response, we move to the next question. Our next question comes from the line of Sia Deshmukh from Pune E-Stock Broking Limited. Please go ahead.
Hello, am I audible?
Yes, ma'am, you are. Please go ahead.
My first question was, what share of our order book is now EV plus hybrid linked? And the second, are we seeing better realization in EV components versus ICE?
What is it? EV and hybrid. Right? Yeah, hybrid. We have grown from 4% to 7%, mainly because of the hybrid increase in the market now. So, but what is the growth in the next year? That will be crossing double-digit numbers. So we will be close to 7%. What has happened is both the IC engine and the hybrid and the EV both are growing, and we are participating in both, and but the IC engine grew faster, and the IC vehicles grew faster. And so our EV share had gone up to EV hybrid had gone up to 9% of our turnover, but now it is in the region of what? About 7%. And next year, we are the growth that is taking place in the hybrid. We are hoping that there will be a double-digit growth. There will be close to double-digit or even above that.
Okay, thank you, sir.
But you must also recognize one thing, that in Europe they've relaxed the IC engines. Earlier they had almost put an end to the IC engine by 2035, but now that has been relaxed. So we see IC engine grow both in Europe as well as in the US.
Okay, that's helpful. Thank you.
Thank you. Our next question comes from the line of Yash Jhunjhunwala, an individual investor. Please go ahead.
Hi, am I audible?
Yes, clear.
Yeah, hi. So my first question is actually on the railway side. In the Q2 Concall, you had said that we have already started supplying some parts to railways. So has railway contributed to any part of our revenue in Q3?
See, we were supplying indirectly, not directly to the railways, and we were supplying to companies who are suppliers to the railways. But now the RDSO has given us approval for a couple of components, and we have another inspection taking place for more set of components. So this year we will be supplying directly also to the railways. But having said that, there is very little contribution, but there is a contribution to the sales to the indirect sales to the railways. And I think in the second quarter of next year, we should be regular suppliers to railways directly and indirectly. And we are hoping that the revenue will grow pretty fast.
So we had guided that we will do about 60 to 70 crore rupees of revenue from railways in financial year 26. So are we on track, or has that been delayed?
No, we are not on track there, but 27 definitely will be crossing that.
Okay. My second question is actually on the commodity side, because aluminum and copper prices have gone up. Are we seeing any demand-related headwinds, and what does that do to our margins? Like in our conversations with our OEM, have these prices come up, and how are these being looked at from a demand perspective?
You want to take it?
Yeah, our RM prices is indexed with the customer, and customer basically index for the RM prices on the quarterly basis, and with some customers we have on the monthly basis also. So on the RM side, if there is an increase on the RM side, it will not affect our margins. There may be a lag for some time before we get the entire recovery from the customer.
But having said that, the margins if you look at the percentage of EBITDA, that does get impacted, because your sales goes up, and but what we get from the customer is just that clean differential in pricing that has gone up, and that does have so that becomes a challenge for us, and we need to fight. We keep on fighting with our customers on increasing our other costs as well. So that's a challenge that we always have, and but we will keep on facing it. But besides the raw materials, the labor code is the other thing that has been implemented, and we are already I think in about a month's time, once we get all the clarification, we will be approaching our customers for a price revision there also.
Okay. And lastly, if I may ask, any update on the electronics fuses that we were participating in? Are we seeing any build-up of interest there? Because we had participated in some auctions, I believe.
There's a big tender we participated in, and that finally the government withdrew the tender after almost 3 to 4 years. and there was a lot of excitement because we were definitely the front runners there. And the government, they've gone back to the old policy of giving it back to the public sector undertakings. So that is the status of the fuse. But now again they're coming with a policy that at least 20% or 25% should come from the private sector because they need to de-risk their supply base also. So all this is happening, but you know how the government moves and how the army moves is very, very slow process.
Okay, so for the time being, there will be no supplies of fuses from our end.
No. We probably supply to the public PSUs who are supplying fuses to the army, but directly no, not at the moment. But as and when it happens, we will definitely inform you about this.
Okay, thank you. That's all from my side.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Our next question comes from the line of Aman from Astute Investment Management. Please go ahead.
Yeah, sir. So, continuing with the fuse part of the business. So, in terms of trials, are we already approved or orders obviously will take time to come, but where are we in terms of trial? And are we only focusing on the art? Sorry, go ahead, sir.
See, what happened? I'll tell you what happened. There was a tender, and I remember we holding almost 150 crore, 120 crores or something of bank guarantee that we had given for a tender which is about 10,000 crores. And so we got the samples ready and we submitted everything. The samples got tested also, and everything was okay. And that's the time that the army changed the army or the government changed the policy, and they decided to fall back on to the PSUs rather than go to the private sector. So that is what has happened. So the testing and everything has been done, but the point is the order placement, the tenders were withdrawn and they were not opened.
So that you had explained 2-3 years back quite clearly, and it was given to the public sector companies. My question was, some companies are thinking about, say, exports, or they are even thinking about, say, doing other kind of fuses. So one is this artillery fuse, 155 mm, which I think only PSC has been given. But what I saw was there was a couple of tenders that has opened up recently for other kinds of fuses for, say, lower caliber. So are we thinking about participating in that? Where are we in terms of trials for those kind of products? Whatever has happened has happened. We can't change that. But any new things, new products we are developing? That is the question.
At the moment, on the fuse front, whatever our collaborator in South Africa had, we were quoting those fuses. But now the other fuses that we are talking to our collaborators if they could give us the technology for those.
Okay, so we also have a tie-up with that South African company.
Yeah. I think most of the companies have a tie with the same company. Even the PSUs have a tie with the same company.
Sure, sir. And sorry, I missed that part in terms of what was the growth target for next year in auto segment and the margins we are targeting next year.
I think there will be a growth of double-digit growth definitely this year, and both in the export front as well as the domestic front. And in the export front, there are many programs which are being launched, which we have been in the process of launching the whole of this year. And some of them will come into production in the first quarter, and some will come into production in the second quarter of next year. And there are more that are being launched both for the domestic market as well as the export market. So we are in there, and I think the growth will be more than it's more than 10%, 12%, if not 15%. But we'll be able to give you a clearer picture in the next meeting, because we are organizing our budget meeting.
Sure, sir. Thank you for answering the question.
Thank you. Our next question comes from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes, you are audible, sir, but can you speak a little louder?
Thank you very much for this opportunity, sir. So, sir, on the railway front, you mentioned that now the 70-80 crores, we are not on track, and maybe we'll cross that in FY27, right?
Yes.
Yeah. So accordingly, I mean, this year we were targeting around 26 and Hello?
Carry on.
Yeah. So we were targeting around 2,600 crores. So how would that change, and given that railways will be short?
We'll be very close to that, but we will not be touching that figure. That is one. It's not only because of the railways. We did better in the component side as far as the domestic part is concerned. But in the export side, because of Mr. Donald Trump, we had some tensions were there. But even though our exports to the US went up, they would have gone up much more than this. And so the market has been mixed this year. So what we lost in the railways, we did cover up a lot in the other side, in the two-wheeler side especially. But let's see, now with the railways will certainly add on to our turnover next year. That's for sure.
And what sort of revenue we are targeting in railways in next year?
Internal target तो बहुत ज़्यादा हमारा, but आपको हम 50-60 ही बोलेंगे अभी.
Come again, sir?
Our target is much higher, but we are committing about 60 to around 60 this year, 60-65.
60-65 what? For next year, FY27?
Yes.
60-65 crores in railways, right?
Yeah.
Okay.
It'll be higher, but yeah.
That's fine. I mean, conservatively, you can say that is what we are looking at.
Because the items that we are producing, we are selecting items where the least investment is there and maximum utilization of our capacity is there. So that will help to improve our total bottom line also.
Okay, I got it. And now the margin front, I think in the last call we had said a margin of 12-13% by 4Q, but we are still far away from it.
We are not there, but we will get there. We are very clear path on to getting to the margin of 13%.
So 13% EBITDA margin. So what's the timeline we can consider now? I mean, this 12-13% of EBITDA margin are now. I mean, in next 2 to 4 quarters, or if not in this fourth quarter.
So in this, Deepak, I guess there are a couple of things to look into. I guess one is the commodity is quite volatile, though we are getting it transferred and settled with the customer. But because of the denominator effect, the percentages do go down. So it is very difficult to say that when exactly we are going to achieve 12 to 13%. Yes, there is an improvement in the business that we are already seeing. I guess there is a good amount of traction in auto sector per se in any case. So we are not dependent on any of even the allied businesses like defense or railway when we are saying there's a good amount of traction that we are looking in our business subsequently as well. So this year, if you recall, we have already done 1,800 odd crores till December, and I guess by the time we close this year, we'll be somewhere around 2,500 crores. For next year, we are already concluding our budget exercise. Maybe by the time we hit next quarter, I guess we'll have most of those numbers handy with respect to what is the kind of top line that we are targeting and what is the kind of bottom line that we are looking at. I guess if you look at even 9 months that we have done for current year, I guess EBITDA margins are hovering at around the 9.6, 9.7%. And this is on a inflated base as well, because the aluminum prices have risen in current year as well. So I guess EBITDA in terms of a percent is more of a theoretical number than practical. But yes, if you look at overall, the numbers are improving. EBITDA in terms of value is improving, and so is the top line.
Okay. I got it. That's very clear. And when we say this margins of 12-13%, we include other income, right?
Yeah, it is. But if you look at even our current numbers, the contribution of other income is
very
coming down.
Yeah.
Yes. So when we are targeting a much improved EBITDA number, this is without any reliance to other income.
Correct. And what is the tax rate one should look at a company level?
25%.
25%, right? Okay. But this quarter your tax rate were higher because of you were a little higher, right? I mean this quarter.
Because of the deferred tax, but I guess overall it will be in and around 25% because we have shifted to the new regime.
Okay. Okay. And just one last thing. in terms of revenue, I mean, you mentioned that we'll kind of look at after fourth quarter, but I think we had said earlier that 3,000 plus is what we might be targeting for FY27. So would there be any material change on that?
That is what we planned for the next 3 to 4 years, and those are the figures we had quoted on there. But a lot of change, and let's see what happens, and I think we might do even better.
Okay. Wish you all the very best. That's it from my side. Thank you so much.
Thank you so much.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Our next question comes from the line of Akash, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
Hello.
You are. Please go ahead.
Hello, sir. Thanks for the opportunity. So my question is regarding the interim US-India trade deal. So with the tariffs coming down to 18%, what is the amount of saving that Rico would be able to retain as margin versus passing it on to the US consumers? And second question is regarding the special 0% duty that the Commerce Minister talked about. So what percentage of Rico's specific product mix qualifies for this duty, if you have any clarity on that?
See, on the tariff front, whatever reduction has been given, but firstly, I must appreciate our customers, all the customers in the US. We requested them for the total price increase, the total tariff to be transferred to us. They all accepted. They all agreed, and now, in full honesty, we will return whatever tariffs have been lowered. We will return it back to the customer. So there won't be any additional profit because of that, but we are hoping to get better business. We'll be able to compete better with against China and the other countries around us.
Okay, sir. That helps. And second question was regarding the specific product mix of Rico that qualifies for the special duty that the Commerce Minister was talking about.
Yeah. There is, we are still seeking clarity on that, and once we get the clarity, we'll be able to answer that question better. At the moment, there is a little confusion there.
Okay, sir. Understood. Thanks a lot, sir. Best of luck.
But having said that, let me tell you that earlier, the duty that we were paying for most of the components that were being exported to the US before the tariff business came in, it was close to about 3-some odd percent. It was 2.75% was the duty, and some other taxes. 3.2 was the total percentage. So we were exporting our goods to the US at 3.2. Then the tariffs came in, but the tariffs also got applied to China, Vietnam, and all the other countries who we actually compete with. So then the differential was that when we were paying 25%, Vietnam was 19%, China was about 33-34%. So we still had an advantage there because over Vietnam, definitely, because we have the capacities to supply, and we also have the confidence of the customers that we can supply. And while discussing the customers who agreed to, all of them agreed to pay us the additional tariffs that were done, but they were very, very confident that in 6 months to 1 year time, these tariffs will come down and they'll normalize. And so we all worked on that, in that direction. So it's mainly the confidence that the customers have on us that we continue doing our business and we'll keep on expanding our business with our customers. So we have been supplying at 3.25%. And now today is 18 plus 3.25%. We will continue to supply because of our relationship with the customers and the confidence of the customers.
And if my understanding is correct, the tariff will be passed on to the customers.
Absolutely, because they paid us for it, and we in all fairness, we will pass it on to them.
Okay, sir. Understood. Thanks a lot, sir. This helps a lot. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments.
So once again, thank you so much for joining the call. and we are confident enough that the Q4 will also be very promising for us going forward. And in the Q4 also, we are going to launch a couple of new programs which will have their peak revenue in the subsequent years. And with respect to the questions related to the growth and the EBITDA margin and profitability, we will be coming back to all of you in the next conference call when we will complete our internal exercise, complete budget business plan. Thank you so much.
Fortunately, the market is good and there's a lot of buoyancy and there's a lot of excitement in the market and amongst our OEMs as well as the customers also, and the customers are not only in the cities but also in the rural areas. So there's a total growth that is taking place, and we wish and hope that this continues.
Thank you so much.
Yeah, thank you so much.
Thank you. On behalf of Rico Auto Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, Deep.